Hi, I'm Ankur Kapoor. Today we'll be discussing very interesting topic, difference between investing and speculation. So let's get started. In 2011, I read one very interesting and important book in investing, that is Intelligent Investor by Benjamin Graham. This book was written in 1930s, but it's still relevant. In case you have not read, take time out and read this book. It is must read. So one of the initial chapters of this book is dedicated to this topic, which is investment versus speculation. So in this video, we'll be discussing about what's the difference between these two and why it is important. So what is speculation or speculative investing? It is basically focused only on pricing and it is short-term oriented approach. What is investment or investing? It is based on underlying and it is a long-term approach. That's the basic difference. Why it is important to note? Because often we mix up these two approaches thinking that we are investing, but we might be speculating. Here are a couple of examples that will help you understand the difference, and next time whenever you are putting your money, if this distinction is clear, whether it's for investing or for speculation, you will be on the right side of things. There is no harm in investing or speculating. The only difference is you should be aware what you're doing. So the first example I'll pose is startup investing. They don't have any cash flows, they don't have any profits. A lot of stuff that is happening behind them is basically market fad and media capturing way too much about them. They are probably brands. You see them more and you think that they will tend to capture the market, not thinking that, there can be a competitive landscape. If some business is profitable, competition will enter. If business is not profitable, competition will not enter, but at the end there will not be any cash also. This is the fundamental rule of investing. So we allocate money in these companies in the form of startup investing or angel investing. To me, that is purely speculative. Let's move on to the next example, which is a very hot asset class, real estate. So often people invest in real estate assuming that there will be so many extrapolations happening in a particular location, and they assign any value. Well, builder's job is definitely to assign any value, but investors also are carried away in assigning that value. These would often be in areas that are upcoming and they are positioned in a certain way, not knowing that there can be legal hurdles, there can be many things that are in future and you can't predict them all. So one of the things that I have realized in investing is you can't predict future, so don't even try that. Base your decision on the present and then make a decision. So often real estate investing is driven by that future anticipation. And when you see the statistics, land is where you make a lot of money, even in real estate. But people assign some absurd numbers investing in apartments. Globally as well as in India, apartments have not beaten inflation. There is no way that can happen. In fact, people investing in 2009, 2010, 11, 12, they might not have even recovered their principal. Forget about making any return. And even if you invest at the right time, still the best return scenario in case of an apartment is just the inflation, say 6-7% per annum kind of return. Not more than that. So investing in real estate can often be speculative in nature, especially the new projects. Now, another category which is often used by us, say oil, say gold, silver, other commodities, copper, aluminium and all. So most often commodity business is speculative in nature. There is no way you can anticipate what's going to be the case after 1 month, let's say the price of gold. Recently Ukraine-Russia war happened and gold prices jumped. Any form of fear in global markets will cause that. But will that be persistent? Will that continue to increase? you can't anticipate these events, right? When the events are happening, you're thinking we might be entering into World War III. Well, the possibility of that, you just don't know. The next category I'll talk about are IPOs. In case of IPOs, promoter is selling their stake and investment banker is helping them sell. I don't know where the equation includes investor. More often than not, it does not. So it's better to stay away from IPOs, let the shares come in, wait, even if they're like great companies, you can always wait for the right price to get in. And investing or subscribing to IPOs is not a good strategy. As I said, investors do not have anything to gain out of it. A lot of people invest thinking that a premium will be paid and they can make money, quick bucks out of it. Again, it's speculative in nature. So bear that thing in mind. There is no harm in applying to IPOs, but it is speculative activity. It is not investing activity. Investing activity will happen at the right price, maybe later, maybe after 1 year, maybe after 6 months, who knows, but it is based on underlying and it is based on the right price. Another category, cryptocurrency. If you understand the technology, it's much more intelligent to invest in the technology in your own scheme of things. I do not understand technology business that deeply, but sure, if you understand cryptocurrency technology, it might be wise. But during my McKinsey days, I did one research on currency and I was writing a paper. It was so hard to write that I could not conclude my study because each and every currency management theories, which tracks back to almost 50-60 years of theories, they contradict with each other and there is no conclusive way of establishing that this is the way you follow and you will get to this price. Unlike stocks, we know how stocks are valued, we know how bonds are valued, but we do not really know how currencies are valued. Quite a speculative market there. Then on top of it, you have crypto technology based solutions. Absolutely no underlying to understand what is driving what. So it's purely speculative in nature. There may be people who might be hopping and carrying that thumb that they did a great job in terms of returns in crypto. Great, good for them. But will you make money out of it? Chances are very low. So be very careful when you're investing into such asset categories that can backfire and pretty much have no underlying. It's purely speculative in nature. So I've spoken a lot about different categories where a lot of speculation happens, and you can understand and appreciate that often we are investing into these categories thinking that it takes care of our future, but for all practical reasons these are trading opportunities. Even if you're investing in IPO, exit as quickly as possible. If you're investing in crypto, you shouldn't, but if you are, just exit if you make some profit. Do not wait for the next leg, you might just lose money. The same with real estate. Apply your mind. What is more practical in terms of your budget, in terms of all things? Try and avoid new projects as much as possible because they are speculative in nature. If you can invest in, or rather if you want to consume real estate, you want to stay. There are a lot of videos floating around not to invest in real estate. Probably I'll cover in a different video. There is no problem investing in real estate or having your own home. Absolutely not. In fact, Peter Lynch has written this over and over in his famous books he has written, especially in one of the Wall Street, that buying a real estate or investing in office is a very great idea, and I do subscribe to that. Buying real estate for your own consumption or investing in your office if you're running a business is a great idea, or a factory. Owning it is a great idea. Then you don't have to worry about any downturns. It gives you some bit of comfort dealing with those difficult times. So maybe I'll cover in a different video. But for now, if you're investing in real estate, assume that an apartment will give you an inflation kind of return, 5, 6, 7% kind of return per annum. Land may give you more value. You have to just understand the downside of investing in land, encroachment and all those issues, legal issues. If you understand this thin line between speculation and investing, that in itself will take care of your wealth creation, because you will be able to bracket your speculative money and your investing money. This in itself is a good way of thinking, because for investing, you may not be looking at the stock price every day, but speculative, you might be looking at the price to exit. I hope you like the video. Thank you for watching.